Coronation Fund Managers was founded in 1993 in Cape Town and currently has assets under management of 623 billion rand.
Yeah, now this is going to be an interesting conversation because remember, Coronation was the market darling from 2009, 10, 11, 12. We always used to laugh at how the share price just went up and up and up. In the hot stock show, we kept
Everybody wanted to
buying
work
them.
for Coronation.
But you'll see in a minute, it's gone into something of a reverse gear, and that's because that 623 billion in assets has sort of reflected a significant slowdown. And these guys are really front and center with that problem I mentioned earlier about performance fees that accrued in the past, which are not going to come again.
So market cap, 21.8 billion rand, PE of 12, and a dividend yield here of 8.2%. Let's look at the share price graph.
So that will reflect what I'm talking about. So there you are, it gets to like 100 and something and then falls on its face quite badly.
Can you go from loved, unloved, back to loved?
You can, but it takes a while. That's an excellent question. Unfortunately, once you fall out of favor, if it's just a sort of mini blip and then you're back and everyone forgets and they start buying your stock again because it's cheap compared to where it was, that's fine. But I'm afraid once it's gone like 9 months, or a year, people have adjusted to the new reality, which is not one that's pleasing them. Remember,
are you saying that Coronation can't return to its former glory days?
I think it's going to be tough. I think they're going to have to go through a cycle first before those days revisit us. And what the problem here is, remember that in that period, 2011, 2012, 2013, Carl Leinberger and his team of asset managers within Coronation seemed to be putting every step in the right place. They put no foot wrong. What's the phrase I'm looking for?
I can't quite.
They would be in the mining shares when they were going up.
Well.
Then they would be in the retailers when those were going up. Then they would have switched to technology when those were on the move. But in recent times, their top 20 fund has had a subpar performance.
Under Neville Chester.
Unfortunately, after a period of sterling market trouncing numbers, they then had a period of sadly market trailing numbers. They're too heavily invested in resources shares. I don't know what that means now because, of course, resources shares have bounced. So I haven't looked at the very recent performance, but unfortunately, a lot of the intermediaries, the financial advisors, the actuarial scientists, the people that advise pension funds have been saying, no, Coronation, I'm afraid, are not hot anymore. You must now go with fund manager ABC.
I've thought of a suitable phrase. They were the blue-eyed boys of the asset management industry.
Indeed. And, now they're sort of having to play, not catch up, but they're sort of on defensive, right? So if you read their Coronation correspondent, the letter they send out, it's full of articles justifying their long-term investment return and hoping that the investor won't notice too much about their short-term investment returns, which have not been too marvelous.
Are we going to call this one hot or not?
I'm afraid I'm going to have to call it not hot because even though the share price has come down a lot, it doesn't look all that much loved right now. And quite frankly, I fear that the next set of earnings comparatively are not going to look great. And you know what the market loves most is companies that deliver 25, 35, 45% earnings growth every year. It doesn't matter how they do it. People get carried away. This is a momentum type game. So I'm afraid what's going to happen here is you're going to have to get through that cycle so that the year-on-year numbers look more favorable and then it'll start going back up again. So
let's move on. So not hot on Coronation.